Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. Tina Teng, Markets Analyst at CMC Markets APAC Canada, is our guest today coming out of Auckland, New Zealand. Tina, welcome to the show.
Hi, Brian. How are you?
I'm good. Thank you very much. Now, Tina, before we get your insights, let's take a look at how regional markets are performing. But first, let's take a look at crypto markets. Bitcoin is at 19,274.2. It's down 1.39%. Ethereum is at 1,303.47. It's down 2.36%. Now, looking across regional markets, we've got the SGX, which is up 0.39%. Bursa Malaysia is up 0.59%. Shanghai is down 0.58%. The ASX All Ordinaries is up 0.39%. The Nikkei is up 0.58%. The Hang Seng is down 1.17%. And rounding up the numbers, we've got the Kospi, which is down 0.05%. Tina, what's your view on market performance in the first half of the day?
In the first half of the day, actually, the broad markets were pretty positive because the U.S. stocks have risen for the second straight trading day. It made better than expected major U.S. earnings. So first, the slew of U.S. banks' earnings came out pretty strong. They are better than expected, which boosted the whole market sentiment. And this morning, the first major U.S. Tech company, Netflix, reported much stronger than expected earnings as well. So overall, the U.S. markets, U.S. stocks on Wall Street was pretty strong, boosted broad market sentiment. However, we can see today in China and Southeast Asia, the market shares are just going sideways. I think probably just because the Chinese Party Congress still ongoing and then delayed the China's GDP's release, which increased the uncertainties about China's growth.
Now, Tina, I want to ask you about that. I think that caught a lot of investors and analysts off guard, the delay in releasing the GDP results. What's your view on that?
So expectations was weaker than the target they have set up for the whole year. So now expectations for the Chinese whole year GDP now, they can't really make a 5.5% growth for the whole year because of the COVID lockdowns, and also they still stick with the COVID zero policy, which really press on this whole market sentiment. I think that's a major issue of the Chinese stock markets, and also recently the intensified geopolitical tension between China and U.S. also weighed on the Chinese tech shares. So the two major factors are bearish factors for the Chinese broad markets.
Now, speaking of tech, we're going to have Tesla announcing its earnings later today. What's your view on that, and what is market sentiment looking like?
Right now, the sentiment is pretty strong on Wall Street because most of the major companies' earnings came out strong, especially Netflix is the first major tech companies who beat the market expectations. I think now the sentiment is strong, and I think investors may be hoping for Tesla will not disappoint investors, reporting strong earnings as usual. However, I think probably we just need to be aware that Tesla have been growing in the fastest pace for the last few years. And right now, they might face a bottleneck of growth just because I think the weaker demand in China probably will be the issue for their future growth in the revenues, especially the third quarter. They have missed the targets of deliveries. They say the reason for why they missed targets because of supply chain issues and the shipment issues. But some analysts just suspect that probably because the slowdown in growth of China really just dragged this consumer demand for Tesla, especially China is one of the most important markets of the Tesla.
Now, final question, Tina, from your end of the world. The New Zealand dollar has strengthened after strong CPI numbers yesterday. There's also a possibility that the Reserve Bank of New Zealand will raise rates by 75 basis points in the next time it's scheduled to do so, which is in November. Now, this is a big policy dichotomy from the Australian Reserve Bank of Australia. Tell us about your view on this and what's your take on this moving forward?
So the Reserve Bank of New Zealand have been hawkish because of the sticky inflation domestically. Yesterday, the CPI data came out, printed at 7.2%, slightly down from 7.3% in the second quarter. So this was much stronger than expected. The expectation was 6.6%. This data came out, such a hot CPI would reinforce the expectations for the Reserve Bank to more aggressively raise interest rates. The expectation was like 50 basis points for November, but now like including RBNZ, Dutch Bank, they all expect that RBNZ will raise interest rates by 75 basis points in November. This one New Zealand dollars has gone up a lot since the CPI data came out yesterday, and also we found that because Reserve Bank of Australia, they have turned a little bit dovish in the last meeting. So this divergence in the policy caused a divergence movement between Australian dollar and the New Zealand dollar, especially the cross peer Australian dollar against New Zealand dollar now has gone down from 1.15 to now the 1.1. It's up, so about like 500 points drop since RBS turned dovish. And I think going forward, New Zealand dollars might be going stronger against other major currencies.
And so this is an interesting thing. So this policy divergence between the Australian Reserve Bank of Australia and Reserve Bank of New Zealand, one of the reasons possibly is really that the Reserve Bank of Australia is worried about the stress of rate hikes on mortgages, and therefore they were worried about basically the housing market collapsing. What's your thoughts on this?
I think just different banks have different focus of the policy. The RBA has been always a little bit dovish. They're more dovish than RBNZ, and they care more about the growth of the country's economy more than New Zealand central bank. I think RBNZ now focus more on our inflation. That's why they just have been stably raising interest rate. Actually, in September, they have been raising interest rates for 50 basis points for the fifth time since April. And I think this stable pace of rate hikes might be better for the New Zealand economy as people can really predict what they're doing, and they have the certainty for the future growth. Of course, they will press on the housing markets, but actually New Zealand shares market right now are bracing for this rate hikes. So I think just the different views of Reserve Bank, but it have different impact on their own country. They have different issues.
Now, Tina, as always, thank you very much for your insights, and thank you very much for coming on the show.
Thank you, Brian.
Now, I'm Brian Fernandez, and we've been speaking to Tina Teng, Markets Analyst at CMC Markets Asia Pacific and Canada, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and websites. Thanks again for tuning in.